Okay, let's take a look at example 1. So the question is on Goodwood trading. So the company's year end is actually 30th June 2013. So on the first day of the accounting period, Goodwood Trading had issued share capital. The amount totaled $100,000 with 50,000 ordinary shares. Retained earnings was given as 21,340. So on the 2013-19 June, dividends was declared. So what must we do to record this event? Write down the date, 2013 to 19. What is the journal entry for this? We're going to debit dividends. How do we calculate the dividends to be declared? We will have to take 5 cents, 0.05, multiply by the number of shares. So the company actually had 50,000 ordinary shares. So all the share must be rewarded at 5 cents per share. So if you take calculator, 5 cents times 50,000, the amount is actually 2,500. Since the dividends was not paid on the same day, you will have to create a dividends payable. Dividends payable is a type of liability, and in fact it will be paid within the next accounting period. So liability created, you will have to credit dividends payable, $2,500. Next, if dividends was declared during the year, the companies must ensure that these dividends will be taken out from this common pool called retained earning. So retained earning is actually credit in nature. If we were to transfer dividend out from retained earnings, we will have to debit retained earnings. How much should we take out from retained earnings? Since the dividend declared is 2005, we will credit and debit the same amount, $2,500. Okay, what else needs to be done on the last day of the accounting period? The question actually highlighted to us that the profit for the year is actually $10,100. So how do we transfer this profit to the retained earning? We will have to debit profit and loss, 10,100, and credit retained earning. So why credit retained earning? Because retained earning will actually increase when we add in the profit, $10,100. Okay, that's all for the first accounting period. So we are done with the year 1. Next, the question continue on the second accounting period, which is on the 26th of July. The dividends declared on 19 June were paid. So write down the date, July 26. So now you think, should I debit dividends or should I be debiting dividends payable? Since the dividends was not declared on July 26, we are in fact not declaring and paying dividends on July 26. Instead, what happened on July 26 is we are merely trying to make payment for dividends that was declared previously. So what we are paying is actually the dividend payable. So debit dividend payable. How much is the dividend payable? You need to look back to the previous year. The dividends declared was actually 2,500. When you debit dividends payable, what do you credit? You will have to take out money from your business cash at bank to pay for it. That's why you decrease your bank because of the payment. Hence, we will have to credit cash at bank. Okay, next, the next event on the 18th December, 10,000 ordinary shares were issued and fully paid. So again, we will always write down the date first, which is December 18. So what happened is the company is actually issuing refers to selling shares to the general public. So what do we debit and what do we credit? Since the shares were sell or issued, the purpose of doing that is actually trying to get funding. So we will debit cash at bank. How much should I debit? Since the shares is issued at $2 per share and they managed to issue 10,000, so this is the amount of money that will be raised and debited into the business cash at bank. So debit cash at bank, credit issue share capital. Take note, it's called issue share capital, not just capital. So when you're doing questions on company, the capital is now called issue share capital. And because of this event that happened on December 18, how many shares would be in this company at the end of the day? Take note, the issue share at the beginning of year one is actually 50,000 shares. So after this event, now the company actually have 50,000 plus 10. In total, there are 60,000 shares. Okay, if you were to continue on July 2014, 25th June. So this is another dividends being declared to reward the shareholders. So take note, the dividends again was declared, but it will be paid at a later date on 1st of August. So again, we will debit dividends and credit dividend payable. How do we do our calculation for this? Your dividends in this case is going to be declared at 8 cents, 0.08. How many shares do we need to reward? So if you track back at the beginning of year one, we have 50,000 share. But something happened on 18 December. There is another 10,000 shares issued. In total, take note there are 60,000 shares. That will give you the dividends of 4,800. And the dividend payable will also be 4,800. Okay, next. Again, at the end of the second accounting period, June 30th, 2014. So you must remember that since dividends were declared during the year, we will need to again take out from your retained earning 4,800. So we are taking it out because of the dividends being declared on 25th June. So this is something where the question normally they will not remind you. They will only tell you that the dividends will be declared. You will have to do your own transfer at the end of the year. Okay. Lastly, at the end of the year, every company, every business will have to prepare income statement to calculate the profits. So after the calculation is done, what you need to do is please remember to transfer your profit into your retained earning. So we will debit profit and loss 15,400 and then add into retained earning. Remember, retained earnings are actually credit in nature, meaning when you credit it, it will increase 15,400. Okay, we are done with the journal entry in part A.